Are you interested in finding out what's going on in the Columbus, Ohio real estate market in February of 2024? Well, stick around and find out now. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty with your February 2024 real estate market update. Now this month we're going to talk about the same things we talk about pretty much every month, and those are the most impactful three statistics that we typically look at. Number one is going to be inventory. How many houses are on the market? Number two is going to be interest rates. How much is it costing borrowers now, or buyers I should say, to borrow money compared to what it was previously? And the last thing, of course, is what most people are interested in, is how much is my house worth now compared to what it was worth last year. The first thing we're going to talk about is inventory. Now with inventory, we're looking at year over year, and so if you look at January of 2024, we're up 17.4% compared to January of 2023. Now that's great because last year we were really starved of listings, and it's great to see that inventory coming up. If we dive a little bit deeper into that, we can see that there's been 9.5% more new listings this year than there was last year in January. And what that says is that probably had a bunch of homes from December that didn't sell carry over to January, and that's producing that higher inventory number. Now, interestingly, the number of homes that went into contract is also up 17%, which is leaving just about 0.4% to carry over to February, which means that we're really eating away back into that inventory, and so it's probably not going to go up very much. And for those people who are waiting for a bunch of houses to hit the market and prices to come down, I don't see that happening probably ever in our market. So we'll talk about that maybe a little bit more in the pricing segment. However, you probably are better off to buy now versus later. So that's what's going on with inventory. Now, the next thing we're going to talk about are interest rates. And now most of you probably remember the interest rates last year screamed up from the lows in around 3% at the beginning of the year to the highs around 8.1% at the end of the year, or actually more properly peaking at around 8.1% in October. Now, since October, those rates have come down, and in January they continued to come down until we saw some data that came out, and it might have been actually right at the end of January, that was good for the overall economy, but bad for interest rates, because interest rates are somewhat inversely proportional to how well the economy is doing. In other words, the worse the economy, the lower the interest rates, the higher the interest rates. It's probably because the economy is going too fast and the government's trying to slow it down. But in any case, at the end of the month here, or actually as of now, which is almost mid-February, we're looking right around 7% is where interest rates are, maybe just below. Back in the beginning of January, rates were down in the 6.6 range, and they had been falling for a couple months, and so people were feeling pretty comfortable that those were going to continue to fall. I still think they're going to continue to fall, and the Fed has indicated they probably won't reduce interest rates in March, but they're still planning on making cuts this year. So my long-term strategy, aka probably more than a year, we're looking at interest rates probably being back down in the 5.5% range. Maybe not by this time next year, but probably by summer of next year or 2025. So that's what's going on with interest rates. So now the last thing we're going to talk about is sale price. How much is my house worth now compared to what it was worth a year ago? Now, of course, these prices aren't reflective of any particular house, but of the average or maybe the median, depending on what we talk about here, for the entire market. And so let's go ahead and get right into it. So the average sold price for January of 2024 was up 8.1% compared to January of 2023. Now, that's a really big jump. That's actually more than double what the national average is in terms of price appreciation for a long time, which is 4%. That's typically what people will tell you that real estate appreciates on the long term. Now, if we look at a couple other interesting statistics, the median sold price, so median being a little bit different than the average including everything, whereas median throws out the ends, being up 9.1%. So that means that the outliers taken out, we're actually appreciating a little bit more than that. So that's actually a good sign that prices are probably going to continue to go up. Now, if we look at what the average active price is, it's only up 6%. And so what does that mean? Well, if the average active price is only up 6%, it could mean that there's more things that are lower priced that are for sale, or it could mean that the number of homes that are on the upper end of the spectrum are less. Either way, I think it's good for most people because most people are in that middle, and the middle is moving up. So that's what we have for you this month in February of 2024. Hopefully we'll get to enjoy this warm weather a little bit longer. I know there is some snow in the forecast, but that's not for us to decide here. But I probably could predict it and be just as accurate as everyone on the news. Anyway, that aside, have a great month, and we'll see you next time. It's the Ryan Reynolds team, unlimited opportunities and exceptional experiences.